Okay, folks, welcome to Sunday night. Oh, Sunday night. 2 seconds into the program, I already flubbed. Damn, that's a record. Welcome to Thursday Night Stock Charts Live. This is where we're going to review the weekly charts. We're going to talk a little bit about how we appear to be poised to close out the week. The only thing I'll keep saying over and over again tonight is one trading day left to go. A lot can happen. We'll take a look at the Fed's balance sheet. I haven't looked at it yet. We'll see how much it grew, or maybe it shrank, maybe it just stayed flat. But we'll take a look at it. So let's kick things off with the weekly charts. A very odd week, a volatile week. Volatility ripped. No great surprise. We have short positions on. They're performing pretty well this week. And especially our short of the small caps finally starting to do well. We're going to be looking to lean into that trade fairly soon. So members, alerts to come when we do lean further into the short side. This is a market that's still being heavily manipulated by the Federal Reserve. All you need to do is take a look at what they're doing with the trip Qs. You gap down, they rip it up higher. They did it the day before yesterday, not so much yesterday. They did it again today. If you take a look at what they've been doing with the Qs, they have to keep the Qs going because you're seeing a divergence, a bearish divergence of more and more stocks not in the triple Q bucket beginning to diverge and to roll over. Even stocks that are in that bucket, the triple Q bucket, they are rolling over. Amazon, hammered up today, but net over the past couple of weeks, hammered. So all is not what it seems. This is a market that's on very, very shaky ground. The only thing it's got going for it is that you have a Federal Reserve as corrupt as they are. They'll remain corrupt. Nobody's calling them out on it. So let's begin. Abel, hello. Hey, Bob, can you do an update? Technical chart Nari, Alibaba. I think, sure, I could do them. But these Chinese stocks, I've been warning about them for years, tweeting about them for years. You got to avoid them, man. It's your senior partner is the Chinese Communist Party, and that's not hyperbole. It's a fact. Look at what they do. Look what they did to Didi. I mean, Didi's dead money. So just beware. There's so many other great stocks out there to trade. I don't know why anybody wants to trade Chinese stocks. The only thing Chinese I've traded is Yang, and that's a short ETF of China, and that's it. Talon, hey Bob, what should we short? We'll take a look tonight, and as I go through them, I'll let you know what I'm seeing set up as potential shorts in terms of the indexes, individual stocks. Well, on stock chart requests, maybe we'll see some that are setting up nicely. But let's scroll through the weekly charts. Let's see how we're poised to close out the week. You're seeing bond yields drop, yet the dollar's going up for whatever reason. I just don't understand it. And believe me, I'm not doing well because of it. My silver trade, my gold trades, hurting this week. We're getting really hurt. What's working well are our option plays on being short the market, our short of the small caps, and that's what's making our week. So let's do it. Let's go to the 10-year yield weekly view, and you can see that we're continuing to see a rejection at what was support for the longest of times is now acting as resistance. I got to tell you, though, when you take a look at a daily chart of the 10-year yield, the Stokes are very, very disturbing in my eye because while price is certainly weak, Stokes are implying that there's not a lot of selling momentum, that we're probably going to hold this 50 mark. Normally, you get a gap down at another lower high on price. You'd see the Stokes follow suit, but they're not. So this downward pressure on yields doesn't have a ton of momentum. And you'll see that as well inversely on the TLT, which we're going to go through in a moment. So I get the feeling here that yields all is not what they seem. Let's save this. We'll reflect back on it on Saturday. On Saturdays, I'm going to do the same thing with members. We go over all of these charts. Then we talk about our positions. What do we want to do? We want to add, want to lighten up, want to hold. And, of course, we'll talk about our watch stocks for the new trading week. The TLT, the 20-year bond ETF weekly chart, no breakout yet. At resistance, we've been here before, and each time it's been rejected. Volume is going to roll in about average. Stokes look good. Let's go to the daily chart because I showed you a bit of a divergence on the stochastics. Good day today on TLT. Do we have the same? No divergence here. Interesting. So the TLT continues to look bullish. I have to side with bulls of the TLT because all I'm doing is hanging my hat on what may be a bullish divergence on the daily chart of the 10-year yield. I have to go with price action, and I have to see what volume. Volume was good today. I have to go with price and volume action. Odds favor bond bulls for now. The tips, 20-year bond. Second flub. How long am I into this? 8 minutes. 2 flubs. Going to be a long night. Weekly chart tips. Treasury inflation protected securities. Down week so far. We're off the lows of the week. Volume high. Let's update Ultimate Oscillator. Money flow is coming off a bit. Yeah, a bit of a breakdown here. Yeah. So this is your secondary downtrend line. A lower band of support, I should say. Here's your primary lower band of support. One trading day left to go. Lock and happen. We can close the new all-time highs, as far as I know, tomorrow. Unlikely, but certainly possible. The U.S. dollar. This has not been updated. This is of the 18th. Let's go to the UUP. That's the dollar bull ETF. Second week in a row. Stockcharts.com has not updated my end of day chart by the time I went live. Invesco. So the dollar is incredibly strong. Incredibly strong. The problem is there's no volume. I think we're going up here to 25.25 on the dollar bull ETF. We could be there as soon as tomorrow. Where do we close? Yeah, it's going to be a big move for the dollar bull. A dime is a big move for the UUP. But I got to tell you, if we close at the highs of the week, the path of least resistance remains higher, and I'm going to have to get real defensive with our gold mining trades and silver mining trades because this is pretty bullish stuff. And how we might get defensive on those positions is that we're going to rally on the gold miners in the next day or so. In fact, I bought call options today on NUGT, and I rarely buy call options. I did it yesterday. We booked a profit. But those are weekly contracts expiring tomorrow. So quick hit. But the ones that I bought today were for October expiration, NUGT. Now, the price action here daily chart of the dollar, I mean, wow. Major league breakout. We are at the pivot point of this W formation. Here's your W. Here's your pivot point, 25.15. We close smack dab right into it. So it looks as though we're probably going to break out tomorrow. But what's probably going to happen is that we're going to roll over on these Stokes. I'm not predicting a crash here. I think this is going to happen. Higher low, and then we hook back up. So on another gap up higher, I'll probably add to our gold mining trade for a speculative trade, not as an investment or a swing trade, because I want to take advantage of a counter trend rally. And if you take a look at the dollar, this is the Dixie after hours. Right up here is where resistance is, and that'll coincide with the dollar bull ETF UUP where resistance is. And I think at that point in time, we're going to roll over, if not tomorrow on a gap, early next week. That'll allow the miners to rally, and at that point in time, I'll probably sell call options going out probably 45 days or so, and I'll buy put options as protection against the position and weather the storm, because I'm not letting go of that trade. The VIX. I was talking to members last night about the probable breakout, and we got that breakout out of this compression zone. This is a pretty major league move on the week. Yes, we're off the highs of the week, but we are back above 20. Daily chart. We reversed off the highs of the session, but still up on the day. Stokes are back above 50 along with RSI. Let's take a look at equities. We'll begin with the transports. Weekly view. If this were Friday and we were closed, this is one bearish chart. But it's not Friday. We have one trading day left to go, and we can salvage the week by closing back above 14,500. Actually higher than that. So let's call it 14,600. Daily chart. I want to stand corrected. 14,800. This is the key support level. It's going to be very difficult. Volume rose today. We broke multiple support levels on the week. The transports are in a lot of trouble. The Dow Jones Industrial Average down 1.75% on the week. Here's the problem for the Dow, is that despite the fact we put in all-time highs this week, we have an outside reversal bar, or AKA a bearish engulfing of the prior week's move. Very bearish stuff. Volume is very light. Indicators, lower highs all over the place. Very weak. Daily chart. So at a bare minimum, we have a breakout point failure, meaning we broke out daily time frame here on the 10th, rallied, pulled back, retested what was resistance, should now have acted as support. It didn't. It failed. At a bare minimum, you retrace normally back down to the lower band of the prior formation. Many times you break it. So I am not bullish on the Dow Jones. If they close it back above 35,000, entirely possible. All you need is the Fed's trading desk to ramp things up in the futures market tomorrow morning. Squeeze the shorts on a Friday. Happens all the time. So they can salvage this. But as it stands right now, the assumption being there is no Fed intervention, no plunge protection team intervention, there's a very good chance that we continue to weaken up here on the Dow Jones. Volume rose. The only time we saw light volume this week was when we were pushing towards all-time highs. S&P 500, weekly chart, another outside reversal bar after putting in new all-time highs. We're rolling over on RSI. Stokes are very long in the tooth here, man. We have taken out the lows of last week. Volume light, just like with the Dow Jones. Wrong chart. Daily chart. That's not a daily chart. Daily chart. A reversal day today. We closed back above 4,400. Volume was good. Stokes are not good. Jury's out. I would not be a buyer of this dip. Small caps, of which we are short. And man, have I taken heat on this trade. So here's the logic of as to why we got short. We're going to go first with a monthly chart. And when we got short, it was a few months ago. And we were trading above the third standard deviation Bollinger Band. I had no idea they would keep this popped up for so long. I can't tell you how many times we have seen what appeared to be a classic breakdown. What happens? It just rips up higher in a short squeeze. It's happened over and over and over. It's so frustrating. And you know it's manipulation. And finally, it looks as though the small caps are really beginning to weaken up here, as they did last month. We're on target right now to have our second consecutive down month in a row, and that hasn't happened since the COVID sell-off. So we remain very far extended away from the 48-month moving average. You know what? I wanted to go to the weekly chart first. Weekly chart. A lot of technical damage done here. Stokes are weak and getting weaker. Stochastics down below 50 and declining. You need to know, rallies tend to fade. I would not be a buyer of the small caps. This is my favorite short right now. Right now, the small caps. In fact, I'll show you a chart. I call this my S&P 500 sandbox. And basically, it's just a sandbox is what developers use to test their scripts. So this is what I test to use overlays. And you can see overlaid here in gray are the triple Qs, candlestick, the S&P 500, and in orange are the small caps. You could see that the small caps have been rolling over for months now. And now they are a threat of really beginning to break down. They haven't yet. Not critically broken down. We're right there. We're right at the precipice of breaking down. If we close down below 207 per share on the IWM, it's all over. It's all over for the small caps. And I would have no problem with opening up a small short on a new weekly low next week, and I would look to lean into that short on a close below 207 per share, because that would be a classic breakdown. That means that the path of least resistance would have now changed from the upside to now being down. Volume's going to roll in about average, so some serious selling going on out there. Daily chart. Sunil, hi. AMD. I caught a lot of flack on that AMD trade too. I said short it. People went in and bought it. And look at it now. I haven't looked at it. I booked profits on the trade. I'll take a look at it for you. I'm interested to see where it is now. All right, IWM Stokes daily time frame nearing oversold levels. I think they're going to rally this in the next few days. But that rally should be met with some selling. And if you're looking to open up a short trade here, I'd be eyeballing the 222 mark on a counter trend move. That way you could set a stop loss right above. If we break out and above this, now a declining upper band of resistance. So if we break out and above it, you're probably going to want to stop out of that short. Stay small. If after you open up your short position, it begins to work for you, and we put in a new weekly low, and especially if we break down below 207 per share, lean into it. The trip Qs, of which I am also short, down 1 1/3% on the day, on the week. 360 is critical support. Note the rollover on RSI. We have lower highs and lower lows now. But price is not following through to the downside yet. But despite the fact that the Dow Jones and the S&P 500 have just put in new all-time highs, Qs is stalling. They've stopped going up. Qs daily time frame reversal bar. Stokes tomorrow are going to open up down below 50. We already have the fast line down below 50. The slow line will be down below 50 tomorrow. Rallies tend to fade when you get that. So be careful. We have a reversal bar on the day, resistance at 365. We break to new weekly lows. I'd be looking to lean into the short side on the Qs. The banks. I'm torn on the banks. I mentioned earlier that I'm suspect of this pullback on the 10-year yield. Why does that matter? It matters because if I'm right and yields actually head fake us out and move up versus moving down, well then that's great for the banks. So what we may be seeing here this week is a retest of support. And I mentioned to members, and I probably mentioned it last week and on Sunday on this program, that I was looking for a retest of $37 per share on the XLF. We went as low as $37.22. You know what? Close enough for government work. So I'll take that. We're holding support on the week. Yes, it's an ugly week. We're down nearly 3%. Why? It's because the 10-year yield broke down. Banks like rising yields. They get more. They're more profitable. Their loan book is more profitable. It expands their NIM, net interest margins. Let's go to a daily chart. Now, the daily chart, and if I can ask you folks to smash that like button, destroy it, I'd appreciate it. It helps me out with the YouTube algorithms. Thank you very much. Daily chart, XLF, down 0.75 percentage point. Bounced right off of support. I was asked about FAS, which is the leveraged bank ETF. I like it. Yeah, both the FAS and XLF have put in new weekly lows, but I like the FAS. It's my preferred over the XLF. So if I see a pop higher on yields, I'm going to be looking to buy the banks. Technology down over 3/4 of a percentage point on the week. New all-time highs this week, but it couldn't hold it. Volume is very light. Daily chart. We broke support today, reversed on volume. I still wouldn't buy this. Your RSI, Stokes are all going in the wrong direction. I think this is a short covering rally. I think that this was the Federal Reserve squeezing shorts. Look what they did. They gapped it down this morning. Buy programs kicked in. And this is what I've been looking at on the small caps for, I don't know, March, April, May, June. We're in August now. The past 6 months, I've been looking at this constantly. They gap it down. Computers kick in, driving it back up. Look at the buying here. Look at the buying, right? All on light volume. Look at the selling on heavy volume. It's all computerized. Semis, weekly chart, big breakdown here, nearly 2.75% on the week. And we are at current down below a support level after having broken out. Now remember, one trading day left to go here, but this is a significant chart because the semis have been a leadership group. And if we see the SMH close down below 260, that's a big problem because we broke out only 4 weeks ago. Big breakout, continuation move up higher, stalled, rolled over. So the semis are in a lot of trouble here. One trading day left to go. Maybe they'll rally back. I don't know. I'm not that smart. But as it stands right now in this snapshot in time, the semis are in trouble. Volume is very light, but it is going to come in higher than last week's volume. Daily chart. Good volume on the day. It reversed off the lows. I'm still very suspect of the semis. See how they closed today. Here's that morning rip. Same thing. Morning rip, pulled back higher low, but didn't close out the day at the highs of the session. Big down volume into the close. Let's do a deeper dive. There is a wick at the bottom. Maybe you saw some buying, a big buy program kick in. 5-minute chart. Yeah, that's what happened. So we don't want to talk our book here. We want to be honest. We're not CNBC. We have no agenda except to tell the truth of what we're looking at. So semis under a lot of pressure. One trading day left to go. Biotechs, man, horrible week. Very, very bad week. I was tempted to go trading these. I'm glad I didn't. And you're seeing down 14, nearly 14.5%. Remember, this is a leveraged ETF. Okay, so keep that in mind. Divide by 3. Volume is very heavy. Oh, wrong chart. Daily chart. Wow. A blistering day today. Down 7% on volume. Consumer discretionaries. Horrible week. One of the worst performing sectors. Down 3%. This is not a leveraged ETF. This is going lower. Volume is going to come in above average. Avoid. This speaks volumes about the U.S. consumer. Inflation is here, folks. And why the U.S. dollar is going up, I have no idea. None. I'm technically short of the dollar. But guess what? Mr. Market says I'm wrong right now. So, we have to hedge. Let's check out the Pimp Mac Daddy of all consumer discretionary, Starbucks. Wow. Hurting. Ripped to new all-time highs only a few weeks ago. Now, we're right near the lows of that week. That was a beautiful bullish key reversal bar. No follow-through on it, though. Avoid. Energy. And this is not a leveraged ETF. This is by far the worst performing group. This is just speaking volumes. If you're looking at these charts and you're saying, okay, what's the market telling us right now? What is it saying? It's saying, okay, your consumer discretionaries are verkauft. Why? Consumer spending slowing down. They're buying on. They're using credit cards. They're not going to get that $300 push on the extension for unemployment benefits. So no bueno there for consumer discretionaries. You have inflation. Rents are going up. Insurance is going up. So what are you going to do? What money are you going to have that's discretionary? So the discretionary names are getting hit. Less so are the staple names. Energy. This is the market saying we're slowing down. The globe is slowing down. Simply take a look at basic materials. Case in point, U.S. Steel. U.S. Steel alone is down over 5.5% on the week. Here's the Dow Jones Basic Materials Index. Look at this. This is a cluster F. Here's a monthly chart. This was the reflation trade. Weekly chart. Wow, this is bad. This is really bad. Here's your lower high. And if we break 498.23 on this index, you're in a new bear market. Right now, the trend is still to the upside. Maybe it's going to be a consolidation. We'll revisit it from time to time, but right now it's not looking good. It's looking very, very bearish, down nearly 5% on the week. So this is the stock market, the beauty of the stock market. It's telling you that this is a slowdown in the global economy. Yields, bond yields are telling you the economy is slowing down. So beware. Chris, also, if new variants are bad, there's new lockdowns, the Fed can't taper, and the Treasury yields keep dropping. Isn't that bullish for e-commerce? If they do new lockdowns, yes. The only problem is going to be that you're not going to have the monetary heroin by the consumer, unless, of course, they push through another round of spending. And the thing to keep in mind now, and this really weakens Biden up quite a bit. I mean, this Afghanistan fiasco is, I'll put it to you this way. If he's in office this time next month, I'd be shocked. But Harris is no better. She's incompetent. So she only got 1% of the vote in the primaries out of California, her own state. So that's how unpopular is. They know her and they don't like her. So we're in a bad spot. We're in a very, very bad spot. You have a pool of Democrats in the House revolting against Nancy Pelosi. Why? It's because she won't pass that ridiculously horrible initial stimulus bill unless they pass, which is what, $1.5 trillion? She won't allow that to come to the floor for a vote unless they vote for another $3.5 trillion worth of spending. Unless they get that passed, this whole thing goes away really quick, because I want to harken back to let's bring up the S&P 500. Let's go back to COVID, God forbid. And we saw time after time, day after day, the Federal Reserve coming out. They have a new plan. They're cutting rates. Hold on, bear with me. Let's go back 2 years. Okay, so here, we're cutting rates, 0.5 percentage point, rally, fade. We're going to do this. Okay, great. Rally, fade. Rally, fade. This is the Federal Reserve speaking, but nobody was listening. Nobody cared. It wasn't enough anymore. That's when the Federal Reserve went to Treasury, went to Congress and said, listen, you guys got to start spending. We're sending all this money to the banks, and they're not doing anything with it. You got to send money directly to the individual. That's the only thing that got this market up and running again. Absent that, the Federal Reserve had no clothes. They were done. So the market's called BS on the Federal Reserve back here. Not many people remember that. I would encourage you, go back, take a look at the statements from during this time frame, overlay on your chart the reaction by the market to those statements. It was not wonderful. So while I hope that they do not pass this horrible, horrible bill, this spending bill, either one of them, I hope that it never makes it to a vote, or they never make it to a vote. If it doesn't happen, look out below for this market, because it's the only thing keeping the market up. Oil. Another sign that the global economy is slowing down here. We're down over 5.5%. I put on hold my home heating oil delivery because I was waiting for a pullback, and we got it. Nice. So I think I'm going to call up and get a partial delivery because I see more lower lows happening here. So home heating oil. If you can afford to wait a week, wait a week. I think you're going lower. So we're arbitraging home heating oil here at the Desmond residence. Emerging markets, weekly chart. Horrible. Why are they horrible? 30% of these emerging market funds are China, at least in this case, 30%. Remember, China went to all these big emerging market family funds and said, listen, you need to own more of our stocks, or else you can't sell your products here. You need to pump more in. So a lot of these emerging market funds are overweight China. I don't want anything to do with China. Nothing. They're your senior partner in your trade. And they're not held up to the same accounting transparency as U.S.-based stocks. Look at DD. This major league cluster F. Think of the gall. The gall. They go public here. A couple of days later, the CCP comes out and said, nah, you're not going to be growing. They took all these investors' money. It saw a high of $18 a share. Where did it close today? $7.20. And it's going lower, folks. I don't know how you invest in these things. Anything CCP, anything mainland China, Hong Kong, I don't want to own. Gold. Now, while the mining stocks have had a very, very rough week, gold has had a great week. You know, relatively speaking, the markets have been under a lot of pressure. Gold, it's up. It's up over a 0.25 percentage point. The problem is that, before I go to the problem is, let's stick with the positives here. The dollar is up. The inverse correlation to the dollar and gold is like, I don't know, 90%. Let's check it out. We'll bring up price performance. We'll bring up correlation. And we'll talk about it. We'll chat. You know what? They didn't update this chart yet for US dollar. Let's go with the UUP. I know that's updated real time. Behind price, above price, gray, gray. All right, so the dollar is going to be in gray. So look at the correlation. Highly inversely correlated, but it's becoming less so. You're hooking up. So clearly a negative correlation between the US dollar and gold, but it's less worse than normal. And my guess is on a daily time frame, this is a lot better. We'll go to that in a moment. But gold looking okay. On a weekly time frame, it was higher. Volume to the upside is going to roll in below average, well below average. Let's go to a daily chart really quick. I lost my correlation. Daily chart. Here, look at that correlation now. You have a higher low on the correlation. Look at the last time that happened. Yeah, we sold off, but then we ripped on gold. I'm going to save this chart because I think what might be setting up here, and this could be a little bit of hopium, to be honest with you. We'll see how we close out the week. Again, one trading day left to go. But I think what we may be setting up for here is a bull flag setup. We have broken out on RSI, and I did warn that this was probably a W formation, and it was. I think gold could pop up higher tomorrow. Yeah. I think there's a very good chance. Gold miners, rough week, man. But we're so oversold. I bought call options, as I mentioned earlier, on NUGT. I don't normally buy options. I normally sell them. But I don't want to go selling more covered calls now because you're going to get a pop on the gold mining stocks And ideally, you don't want to sell covered calls when you have a stock or an ETF in this case that is really, really oversold and due for a bounce. I would sell them on the counter trend rally, but not right now. We're going to pop here, if not tomorrow, early next week, and it's probably going to be a healthy rally for a couple of days. It really all depends upon the US dollar and inflation numbers. Comments. What do you think about Michael Burry's shorts, ARK, Tesla, TLT? Well, so I think he's right on ARK. As it stands right now on TLT, he's wrong. I'm not saying longer term he's incorrect, but he is long of options. So there's, unless he's going to roll them, there is a time decay issue there. And while it's a defined risk trade, right now he's losing money on that trade because TLT has only gone up since that filing he made with the SEC. Now, ARK is a different story. ARK is loaded with small caps, micro caps, mid caps, and they're out of favor. And I've warned about ARK. I don't like her. See, the thing with Cathie Wood, I think that, you know, with time, she's ultimately going to be proven right. She's not a technician. She bought Coinbase, right at the highs. She bought Hood right when they went public. Why? Why not wait for a good setup? So right now the chart of ARK is very weak and it's going to get weaker. So Burry here is right. I think that ultimately he's going to be proven right. Now, with the short of the TLT, here's your lower high. And we've already put in, honestly, a lower low. So here was our lower low back here. Right? So we had a lower high. This is probably why we went short. We broke down, rallied, lower high. Then we broke to new lower lows below the 108.81 mark. Now we rallied back, connected dots, lower highs yet again. It looks as though we're probably going to break to new lower lows because the trend has changed now. The trend is no longer up. It's down. But we haven't had the real serious selling yet that puts fear into people. It's just been lethargic. But net, the ARK fund is weak and it's probably going to get weaker. These are very expensive stocks. And if yields move up higher, these are done. These are done. Now, TLT is a different story. What Burry is betting on is inflation. He's warned about it many, many times. But, you know, the traders right now, they're of the mind that they need to buy dollars because of inflation. Why that is, I have no idea. That's the way the algorithms are programmed. Buy dollars when inflation hits. Because I do have an idea. All right, so I'm being kind of silly in a way. Let me walk you through. In fact, let's do this. I haven't looked at this yet, but this is the Fed's balance. Wow, Jesus Christ. This is the Fed's balance sheet. Oh, my Christ. August the 11th was the last reporting date. Fed's balance sheet was $8.257 trillion. This week, as of yesterday, up, what, another $100 billion in a week. In a week. So this is what Burry's looking at. Right? This is inflation. The only thing that is missing right now from the equation. I think they stopped giving statistics on M1. What's the last reporting date? Yeah, they did. Last year? No, they didn't. They're still reporting this. All right, so the velocity of money, the rapidity of which money is changing hands is at very, very weak, historic lows, in fact. So that's the only element that's missing from Burry's argument. But ultimately, he's going to get proven right. Because when the... Let's bring up the TLT. Okay, so we have traders that are buying dollars and they're buying bonds. Why are they doing that? Well, one is fear. You've seen a sell-off in the market. But the bigger picture is that, especially with the U.S. dollar, is that they believe that the Federal Reserve is going to intervene, that they're going to taper, that they're going to raise rates. But all you have are Fed heads out of the Federal Reserve, Clarita, he's the vice chair, coming out, nonsensical statements about possibly discussing the raising of rates in 2023, 2022, all this gibberish. Yesterday, they expected a statement out of the Federal Reserve that they were going to begin to taper in September. Didn't happen. What did the dollar do? Rallied. What did bonds do? They rallied. Why? Why? It doesn't make any sense. So traders believe that the Federal Reserve is going to defend the economy by raising rates. Here's the dollar. Here, look at this. This is what the market believes. This is why you're seeing the dollar rally. When I say I can't believe or I don't know why the dollar is going higher, I'm being facetious. I do know why. They're convinced yet. They're not appreciating the fact that the Federal Reserve can't raise rates. Even if they were to raise rates, let's say they rose a 0.25 percentage point. Do you think that's going to stop double-digit inflation? It's not. And if they were ever to normalize rates, the interest payments alone on our national debt would equal, this is just interest payments, not principal, would equal our defense budget. That's $700 billion. Think about it. So hopefully I answered your question. I think ultimately Burry's going to be proven right, especially with ARK. With the TLT, it's probably going to be a longer process. I've always said this, is that you know the end is near when you see both the dollar and bonds declining at the same time. That will mean that the globe has lost confidence in the United States. And if you take a look at Afghanistan right now, and you take a look at our policies at the southern border, you take a look at the Fed's balance sheet, would you loan us money? Think about it. So that's my long-winded answer. Hopefully I answered appropriately. Hey, William, great to have you, buddy. We'll go over BABA for you, Chris. All right, let's move on. I'm getting long in the tooth here. We got charts to go over. Well, we only have 5 minutes. All right, so we covered the bases here for the most part. Let's do some chart requests. Folks, this segment's going to be brought to you by our partners over at TrendSpider. Don't settle for ordinary trading software. Automate your grunt work, speed up your technical analysis, and improve your accuracy. I'm going to be using it tonight. I'm going to demonstrate. If you have a question, ask me, and I'll answer it. Reduce costly analytical mistakes by using their trade alerts, the best. Find winning chart setups with their scanners. Explore the product. Use the link below to get to their website. Use my code if you want to join up. 35% discount code on all levels. They have a 7-day free trial offer. I believe in it so much, I give it away free to our silver and gold level members. They have a demo tour. Take a look. All good stuff. Great team over there. Great customer support. You're not going to be left out alone. So take advantage of it. TrendSpider. Let's do some chart requests. Let me go to the members area really quick. We only have 5 minutes to go here. So we have AMD. AMD, NVAX, Nari, Alibaba. All right, what do I have for the members? All right, we have Space. All right, Virgin Galactic. And Boeing. Always a popular one. All right, let's get to it. All right, that's the dollar, which I've been obsessing over. AMD. Now, we just did a strangle trade on AMD. Profitable. Man, I caught flack for it. Because initially I went short. I sold naked puts. Excuse me. I sold naked calls initially. And then as the shares pulled back, I sold naked calls to create a strangle. So when you sell options, you're the casino. You're not the gambler. So AMD monthly chart, bearish key reversal bar in the month. That's not looking good. Well, midway through, a little bit more than midway through the month. Weekly chart, no bueno zone here, as George Gammon would say. We're testing the 103.78 mark. That's got to hold. We close it. Yeah, let's use 10. What do we close today? 103.69. Let's use that as our support level. It's got to hold. Daily chart. Holding support. We may rally here. If we do rally, expect a rally and resistance up at 107.50. But keep in mind, folks, that we're breaking down. We have a bearish monthly chart. The semiconductor sector, if it closes at or near where it is at current on the week, very bearish. I would look for a rally up to the 107.50 mark. If it fails to break through it, I'd probably look to short it again. Now, I started off with a 2-hour chart, and I did pick up something that was interesting. And this is how the automated trend lines save you time. Let's get rid of this. The automated trend lines, the algorithm. Boom. You're in a very tight wedge formation here. There's a very good chance that we pop up higher tomorrow. Just remember, 107.50 is resistance on AMD. If we break down, you got to avoid it. I mean, we're going from bad to worse on AMD if we break down further. Next chart up. NVAX. I like the monthly view. I mean, pretty, really pretty. I believe I've already gone over this chart before, and we were above resistance, but when you're using a monthly chart, you got to remember a lot can happen between when we're breaking out, maybe early in the month, which is what happened, and it doesn't necessarily mean you're going to close there, and that's the case right now. So I would avoid right now weekly chart because we're back down below support. All right, the weekly chart's very interesting. We broke out last week. This week, pullback and a retest. It looks good as a spec. Because the reason why it looks good is that you know exactly where to put your stop loss. If we break down to a new weekly low next week, you got to get out. So if you wanted to open up a small trade here, I would have no problem. Let's take the heat maps off. I would have no problem. Just use a tight stop. Now the daily chart, little bit dicey here. We broke support today, as noted by the automated trend lines. They rallied it, and then it faded. Where are my Stokes? I have a guess here. Let's validate that hunch. Nope. Stokes is still above 50. Okay. So I would wait until as late in the day tomorrow as possible. Make sure weekly support holds. Ideally, you get a pop-up higher tomorrow morning to recapture the support level. I would still wait until late in the day to make sure that it doesn't fade like it did today. So, warning flag on the track here as we broke daily support. Weekly chart looks good. Maybe we'll do another retest next week if we hold support, and maybe next week will be a better time to enter the trade. Nari. Continuation breakdown on monthly time frame, on volume, weekly chart, bullish key reversal bar. A lot of healing here on the week. We're currently above 71.49, looking good on a weekly time frame. Your Stokes is still declining down below 50. I don't like that, but the price action is what matters most. Good volume on the week so far. That's good. Daily chart. I think this could be bought. It's improved quite a bit. Nari looking good. Use a stop, though, right below the lows of the 16th. Alibaba. Jesus Christ. For those folks just joining in, I do not like these mainland Chinese stocks. If you're going to play this for a bounce, look at 156.50 per share. Weekly chart. You're right at a support level. We're leaning into the third standard deviation Bollinger Band on a weekly time frame. It can go lower. You have a couple of support levels down here in the mid 150s. Where do we close? 160.55. I think you have more downside to go here. Daily chart. Yeah. We broke support on the 17th. Continuation breakdown since. We bounced off of support today. We just may head down a little bit lower. Maybe this will hold, but I prefer the 150 mark, the 155 mark, better as a place to enter a trade. One of the reasons being is that volume was very heavy today, and we closed just off the lows of the day, so there's a lot of selling pressure here. Be careful. We're probably going lower. Don't chase any morning rally. It's a sucker's rally. Be careful. Space. Virgin Galactic. Talk about a sell the news event, man. I got to tell you, it's looking interesting. You get around that 23 mark, that's sexy. These Stokes are a nightmare, though. Lower highs, down below 50. What happened? Big rally faded this month. Weekly chart. At current, we're down below support. Here's that $23 per share mark that I like. I want to set up an alert here. I type potential because with the way the small caps are looking right now, I don't like it, and that doesn't bode well for Virgin. Daily chart. Yeah, we were consolidating for a couple of days. Then we broke support today. Avoid. I think we're going to 23 next stop. Last stock up for tonight, Boeing. A lot of trouble here. Bearish reversal bar on the month. We've broken support. Weekly chart. Horrible. We're at the lows of the week. 204 is next support. I like 190 on Boeing. Stokes a week. Daily chart, they tried to rally it today. Stokes are trading down below 50 and declining. What happened? Rallies tend to fade, and it's exactly what happened. I would avoid this. Watch 204 per share. If that fails to hold, watch 190 per share. I prefer the 190, obviously. It's much more of a historical support level than a 200 mark. So watch 190. I would avoid. With that, folks, thanks for joining in. Everybody have a great night. Have a profitable trading day tomorrow and a great weekend. Please smash that like button. Be well. Have a great night.